Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about how Sofi Technologies SOFI stock is in deep negative water right now because of what Apple has done recently. Of course, we're going to be going over their latest price targets and, of course, the latest news updates regarding this particular stock, why insiders are still buying the company, if this is still a good play to hold for the long term for a good, solid growth company, and then lastly, we're going to give an update on a Palantir Technologies PLTR stock and what analysts are currently saying about that. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. So Sofi Technologies, as you know, ticker symbol SOFI, is a fintech company that offers an all-in-one inclusive app where they give their customers access to basically any financial service and or product that they could possibly need through their digital app. And the article says that Apple has actually been aggressively promoting their Apple Pay, which has actually spooked SoFi investors because listen to this. So Apple already conveniently offers payment options for people who are using Apple Pay and then they fall into debt, and they also don't charge interest on this debt, as well as they offer a forgiveness up to a certain dollar amount if you don't pay the debt back at least one time. Furthermore, even if you don't pay it off, they will not hit your credit and it won't cause your credit to fall down. So Apple is literally trying to reel as many people in to their Apple Pay platform and their services as humanly possible, which is scaring many other fintech companies. For example, PayPal, Block, Affirm Holdings, Upstart Holdings, and Sofi Technologies have all been falling lately because mainly these fintech companies are focusing on buy now, pay later, which is also known as BNPL. So it's where you can buy something and then you can pay that thing off over a long period of time. And like we said earlier, Apple is not charging interest on these payments, and they are also going to forgive you at least one time up to a certain dollar amount for one particular payment if you don't decide to pay that debt back. Plus, the fact that this doesn't impact your credit negatively has really started to draw people to Apple's Apple Pay platform, and it's also drawing people away from other fintech companies. So clearly, there is huge competitive risks ahead for PayPal, Block, Affirm Holdings, Upstart, and Sofi Technologies. Even though these companies do different things, they do have some cross-pollination happening here. Also, many investors are betting on the buy now, pay later market to continuously grow upward. However, because Apple has now effectively and efficiently entered this game and they are coming in swinging, this has really negatively affected other fintech companies, especially Sofi Technologies. Sofi already has a very high short interest right now because their float is shorted around 18% right now, and many investors don't believe that Sofi Technologies has a good enough moat or a good enough market or customers that want to use their financial services and or products. Another thing that really works against Sofi Technologies is that, like many other fintech companies, they have limited customer support, so it could take days for them to respond to any inquiries that their customers have with them. So this is really not looking too good for Sofi Technologies, especially because on July 12th, shareholders are going to vote whether or not to give authority to their board of directors to initiate a stock split or not. But we're going to talk about that later in this video. Right now, we're really focusing on Apple, which is one of my highest holdings. So Apple clearly is disrupting the fintech market with their buy now, pay later Apple Pay platform, and this is really negatively impacting companies like Sofi Technologies, even though Sofi Technologies to me is still a good long-term play, especially if it drops below $4 to $5. The company right now trades for around $5.70, while analysts on the more negative side say that the company is worth $7. The average price consensus for the company is around $10.96, and the high-end analyst price target for the company goes as high as $22 per share. And despite the current stock price being relatively low compared to their historic value, insiders and the CEO have continuously bought into the SOFI stock, despite the stock falling around 62.5% year to date and 80% from its all-time highs. So does this mean that we should buy Sofi Technologies? Well, it really depends on your own portfolio and your investing goals as well as your risk tolerance. However, the CEO CEO of Sofi Technologies, recently, literally has bought in totality over the last month or so around 350,000 shares worth more than $2 million, which means he increased his stake and his allocation and his exposure to Sofi Technologies by more than 11%. And if you know me, I have a personal risk management policy that when I invest into single stocks, I don't allocate more than a 5% portfolio allocation to it. Likewise, someone on the board of directors at Sofi Technologies bought around $400,000 worth of the stock, and that increased his overall stake in the company by 24.1%. So clearly they are extremely bullish, and this is very bullish for investors to see. So we have been following this story, and hopefully other investors start to buy up the Sofi stock right now, because clearly when insiders start buying the company, they are not only confident in the company, but they're also confident that the stock price is going to appreciate very rapidly over the next couple of years. Despite a very negative macroeconomic picture right now, Sofi Technologies still looks fairly secure in their current market segment that they are trading at, and the current price point is very attractive in my opinion, mainly because I really like their business model, because they mainly operate off of cross-selling their customers into other products such as their home loans, their personal loans, their brokerage services, and their debit and credit cards. Not to mention that a recession is not really going to impact Sofi Technologies as badly as other companies. For instance, Sofi Technologies, like we said earlier, targets young high earners. And to put that into perspective, the average student loan customers now on average for Sofi Technologies makes an average of $160,000 per year and has a FICO score of around 746. And this gives Sofi Technologies access to a premium customer base. So these customers literally are not going anywhere. And of course, these types of customers are clearly going to pay on the loans that they have gotten from Sofi Technologies. So we have to put it into perspective that Sofi Technologies is not only resilient, but they're also a phenomenal long-term growth stock, considering that the stock price has fallen over 60%, but Sofi Technologies has grown its revenue by around 49%. Clearly, this company is only falling due to macroeconomic factors. Nothing is wrong within the company itself, because clearly the company is still growing their revenues, and if we take in their consideration of their EBITDA, they are just above their break-even point at around $8.7 million. Also, in 2024, we're going to look forward to the company turning profitable by the end of 2024, and they are still on track to do that. So clearly, Sofi Technologies not only has a good customer base, they are growing their revenues, they have very good EBITDA, they're set to become profitable in 2024, and they also saw a steady increase in uptake in their membership. This is overall very positive for Sofi Technologies, especially during a time of macroeconomic uncertainty. And this is why I think Sofi is going to see very strong growth and stock price appreciation throughout the years of 2023 and 2024. Now, specifically for 2022, we are going to see major volatility, and I do think that the stock price could fall even lower. So what do we think of Sofi Technologies? Is it still a good buying opportunity right now? Well, it really depends. It is really cheap, and it's trading at a phenomenal stock price right now when we compare it to its future financial metrics. The company is growing near a 50% growth rate year over year, and it is approaching its book value, so it's really cheap for a growth company, which normally trades at a future multiple or a future value. So overall, I would say they have a very strong business model, and they are a good long-term hold, and recently the stock price has been beaten down, which offers a good buying opportunity. Now, with that being said, again, I don't advocate over a 5% allocation to a single growth company, because I do think this is still a risky company, but it could pay off big for investors who are willing to hold for the long term and not sell during the short-term volatility. With that being said, we want to see why Sofi looks so tempting right now. Another reason why the company is trading at such a cheap valuation is, like we mentioned earlier, on July 12th, investors are going to vote whether or not to grant Sofi's board of directors the power to enact a reverse stock split or not. And some investors really don't like this, but regardless of the outcome of this, this could cause the stock price to increase. For instance, many investors don't want a reverse stock split, so if their management is denied the power to institute a reverse stock split, this could actually temporarily in the short term cause the stock price to spike. Now, you're playing with a double-edged sword here, because one, it doesn't have to spike, and two, if it ends up going through and management does decide to implement a reverse stock split, we could actually see a downtrend in the stock price. However, the author of this article actually says to wait for the reverse stock split before you actually take any gains out of this company. So if you want to get out of this company, you might want to wait for the reverse stock split, because you could see a surge in price, and that's when you would want to take profits and or lower your exposure to SoFi Technologies or get out of the stock entirely, according to this author. Now, for me, I am not allocated more than 5% to this particular company, so even if this company went to zero, it really wouldn't bother me that much. However, it just goes to show you that I am willing to hold this company for the very long term, and I'm not going to pull my money out even in the short term, mainly because my average cost is very low. So in a macroeconomic environment that is really suffering right now due to war, inflation, rising interest rates, and investors liquidating their stocks, the bottom line is to buy good companies that are fundamentally solid and have great future growth projections, just like SoFi Technologies. With that being said, we're going to move on to another growth company that we've been following for the last year, and that's Palantir Technologies PLTR stock. And Palantir is a big data and analytics company that serves both commercial clients as well as government enterprises. The company trades at a rather high price point of around $8.24 if we estimate their current metrics. However, on our low end, we have a $6 price target for the next 12 months, a $10.81 price target for the next 12 months, and a $16 price target. So these are what the bullish investors are saying about the company. These are what the bears are saying about the company, and this is a nice middle ground. So I always like to look at the more bearish negative price targets, because that's what I actually set my portfolio to. So right now, technically, it would be overvalued in some instances, but like we said earlier, this is a growth company, and growth companies are based off of a future multiple. However, if we see what analysts say about this particular company, they are saying that this company is a hold rating. However, the 9 analysts that are currently covering the firm are somewhat disagreeing with each other, because we have one investment analyst that says to sell the company, 3 analysts that say to hold the company, and another 3 analysts that actually say to buy the company. And lastly, the last 2 analysts have actually flipped, which means that we have another sell rating and another hold rating. And that's why overall we actually have more holds than any other buy or sell. So clearly this company, according to analysts, is a holding opportunity. But I would love to hear your thoughts down below. Remember to go and smash that like button for more videos like this one. Subscribe if you are new, and I'll see you in the next YT video.